Hey, everybody. Thanks for tuning back in. We are Fire University. This is Mr. FU for Mr. Fire University. So I want to take a quick second here to give a quick rundown of something that I think needs to be brought up is the keep it simple, stupid, or KISS. So that principle is built around the fact that we tend to overcomplicate things. And so what I want to do real quick is just reiterate that our main goal with this channel is to simplify finance and to make it easy to understand for everybody, because we believe that finance is wrapped around every single thing that we do in every part of our life. And we want to help the entry-level people, the young people just entering the workforce, the ones that tend to have the least amount of knowledge. And unfortunately, because of that, they get taken advantage of the most. So real quick, what this episode's going to focus on is don't fight the Fed. So let me kind of give a brief description here. I'm assuming you're young, you've got some money, you're ready to invest, you just don't know what to do. So you've come up with a couple different ideas. You've seen a million different YouTube videos that say do options, do calls, do puts, do crypto, all the different things. So you have all these different ideas coming at you, and you don't know which is the best to do, how to get started, and you've become sort of just frozen with insecurities about where to get started. But you know that if you were able to pick the right plan and right investment ideology, that you could definitely put your money to work and begin changing your financial future and begin reaping benefits that you see all these other people around you. Therefore, you are definitely ready to hear this and understand this and take this philosophy and apply it to your life. So, don't fight the Fed. A lot of people believe that we create money by printing money. It's really not true anymore. In fact, the United States Mint that prints money, all they do is take money that is worn and, falling apart, and they pull it out of circulation and they print money to replace that money. So that's where actual money, for the most part, is created, actually printed. For the most part, banks nowadays create money. So when you go to a bank, they do something called fractional lending. So what they're able to do is if they have $100,000, they can actually lend out $1 million. And under the premise that it's very unlikely that all the people would come at one time to withdraw their money. And because a lot of that money is going out into non-liquid things such as real estate and stuff where there's not going to be people coming to withdraw that cash. Now, what the Fed is the Fed is basically the banker's bank. So the banks go to the Fed to get loans. So they'll get a specific loan rate, and that's where you hear the federal funds rate. That's the rate that the banks are being charged to borrow money that they lend to people like us in the communities. So if the Fed wants to increase or decrease the money supply, the amount of money in circulation, what they do is they go and they buy or sell bonds. So, the government, where it's local, state, federal, they don't produce anything. They earn revenue by charging taxes. So when they need to raise money to make something, say it's a bridge or update the roads or build a new federal building, what they'll do is issue bonds to raise money. So the Fed will go out and they'll either purchase those bonds, and when they do that, it pours a bunch of money into these banks, and the banks are therefore have a lot of money to lend out, or vice versa. They'll go out and they'll sell these bonds that they've acquired, and that will pull money out of the local banks. So that's kind of a quick high level view of how that works. While we say don't fight the Fed, one of the things the Fed is tasked with is controlling inflation, which we've seen has been a really difficult job lately. And they do that by raising or decreasing the amount of money in the circulation or the money supply. So one of the things that we want to do is when they come out and they say things and they're telegraphing you what they're going to do, we want to be on that side of the play. So if the Fed comes out and says, we're raising rates, we're going to charge more, that means that the trickle down, that the banks in your area are going to charge more, there's going to be less money, less spending, less all around. So you want to make sure that you're not on the other side of those trades. When rates go up, that means bond prices are going to go down, because why would you buy a bond now that's giving this interest rate when you can buy a bond tomorrow that's giving you a higher interest rate? You wouldn't be earning as much money. It wouldn't be worth as much. Then what the Fed will also do is tell you that what they're going to be doing in the future. So if you know that rates are going up, there's going to be less spending, it's not the best time to probably be buying speculative stocks. Rather, it's the time to be buying great, large cap, big companies like your Walmart, your Target, your Colgate, Procter and Gamble, Johnson and Johnson, places like that we know sell things that are very hard for people to get into those markets. So it's hard for companies like upstart companies to start selling. And we know that they have proven decades upon decades, if not centuries, of proven sales that people are going to purchase those regardless of good or bad times. And those people have the ability to increase the cost. So if rates are going up, inflation's going up, they can increase the price of what they sell because it's a necessity, and therefore, maintain their profitability. So that's one place you want to do, because that's going to be stable with your asset value is going to be stable, and your dividend is probably going to remain pretty stable too, because they're going to continue to purchase those items. So that's an area. So then if you're taking that and putting that into other areas, so if you're doing calls, you're doing puts, you're doing, options, it's a good bet that the market's going to drop based on the fact that the Fed is raising rates. It's a good idea or a good bet that the real estate market's going to suffer in the long run, because the Fed is making it harder for people to buy houses. Houses are therefore going to be more on the market, more houses on the market, so the demand is lower and the supply is higher. And all of economics, all of everything is supply and demand. The greater the supply, the lower the demand, the higher the prices. The lower the demand, the greater the supply, the higher the prices. I believe I said that right. But basically, if things are in more demand and there's not a lot of supply, people are going to pay more. If there's a lot of the stuff out there on the market and not a lot of people want it, prices are going to go down. So with that knowledge in place, we know where we want to be regardless of what investments we're going to be making. Second off, watch the news and understand what the people that are in the position to make the calls are saying. If you know they're going to make vaccines mandatory, then it's a good idea that the places that create the vaccines and that administer the vaccines are going to do very well. If they say they want to eliminate gasoline and oil, then it's a very good idea that we want to be on the opposite side of that and be in green investments. So take a little bit of that, use it to the best of your ability, and think about how that applies to each and every investment you make. Right now, my advice, remain liquid. Be ready to take advantage of when prices really, really start dropping, and you usually see a little bit of a lag. Anywhere from 6 months to a year is what we're going to see. Anyway, thanks for joining us. Be sure to hit that like and subscribe. We'll be coming back at you with a lot more stuff here in the near future. And remember, I am not a financial advisor. This is not financial advice. This is for entertainment purposes only. you should always consult a licensed professional before making any financial decisions. Fire University and Mr. FU out.